For Global Business Update, Michael Wilson joins us now from London. Good morning, Michael.
Good morning. I think it's fair to say that the global markets are still digesting, and why aren't they, of course, the shake-up in the banking sector as a result of that SVB failure on Friday. So it's all fairly volatile, but for what it's worth, the progress looks a bit like this. Japan down about 2%, China down about 1%, Hong Kong down about 1% too. One of the things that's particularly affecting China, as you know, it's attempting to revive its tech industry with government regulation. But one of the things it liked about a bank like SVB was that it could get access to the money fairly quickly, where it takes 2 or 3 months with a large established bank. I'm not saying it's a good thing or a bad thing. I'm just saying this is why high-tech startups particularly liked dealing with SVB, because they could get their hands on the money fairly quickly. Now, China's new premier, Li Qiang, has been saying, now if you remember, the Congress over that previous weekend had a relatively modest growth figure as far as China is concerned. What he's saying is he doesn't care about things like GDP and so on, which that basically is dependent. What he's interested in is quality growth, and by quality growth, what he means is where people live, their education, medical demand and so on, and not just about the dry theoretical GDP figure. So what he's after is what he calls a high quality growth target. Nothing to do with, as he says, GDP, but to do with what is about the person in the street and what the quality of life and what kind of growth can be brought to them. Let us go to the United States, and let's not forget that as well as SVB on Friday, Signature Bank was also a bit of a failure too. Investors took about $10 billion out of Signature Bank and over Friday, spooked by what had happened to SVP. The regulators are clamping down hard. As you can see, they acted very, very quickly. Some people are taking this as a sign, because SVP did actually busy itself within the crypto and the tech sector, that the regulators are actually clamping down on those two sectors. And now here's the thing. What will the Fed actually do? Will it raise interest rates when it next meets March the 22nd by 0.25%, or will it stay and do absolutely nothing? A lot of people are actually thinking it will do nothing because of the fragility of the banking system. We'll get the inflation figures in the United States today, expected to be up 0.4% on the month. That's 6% year on year. And the Fed will not be mollifying, as we understand it, its ambition to clamp down on inflation. So as far as I'm concerned, what that means to me is interest rates still continuing to go up in the United States. But there is a thought that they may do absolutely nothing this time around and then wait till May. As far as the EU is concerned, ECB will go ahead, as promised, with its 0.5% increase on Thursday. That takes their deposit rate to 3%. But, and this is a big but, beyond then, there's a feeling that the ECB may be looking at the banking crisis, and let's not be under any mystery about what's actually happened here. I mean, this SVB was the second biggest bank in the second biggest regional bank in the United States. That failure is ricocheting all the way around the world. ECB may actually hold and may hold in May. That's the feeling absolutely there. As far as the budget's concerned here in the UK, Jeremy Hunt is apparently going to offer £1 billion for new business zones. Now, what that means is there'll be low tax, low stamp duty, low national insurance, and low business taxes to allow businesses to compete and to spread over the UK, including Scotland and Wales and Northern Ireland. So again, that's what's expected out of the budget. This may be where he's bracketing his wish to engender some kind of recovery in the UK economy. The idea of any tax cuts is being severely discouraged by the usual kind of leaks that we get before the budget, which takes place tomorrow. HSBC, I'm just reminding you of what happened yesterday, because this was breaking news as it happened. It came as we were actually talking yesterday. So it bought the SVB UK arm for about £1. Now, that stopped the government having to step in. the CEO of HSBC was on the media widely yesterday saying it made sense for the bank. He's certainly getting big thanks from the tech sector, which was very, very worried about their 31,000 companies apparently globally, and about 1.8 billion euros were affected there. But basically, SVP had 6.7 billion in deposits, down from 10 billion on Friday. So over 3 billion pounds went out of that before HSBC actually stepped in. Now, the Prime Minister is being urged, if you remember, he got some sort of agreement, they're calling it the Windsor Agreement, about Northern Ireland. And the fact of that has meant that we are gradually increasing ties again with the European Union, particularly in research and development. And he's being urged to join the Horizon R&D project, which is engendered in the EU, but we could still join it now. Things appear to have got slightly warmer between us and the UK and the EU, and that started over 30,000 global cooperations the last time it was around, and also it gives the UK universities access to 1.8 billion euros worth of research grants. So worth joining that. This is what the markets are saying anyway. Oil falling on risk aversion. I don't really understand why that is. I think it's a lot more to do with a rather confused demand picture still coming out of China. Nobody's really sure about that. But as you'd expect, gold surging as a result of its safe haven status. The next target for that is 1950. What a change one weekend actually brings in the global view. That's the global view this morning.
Okay. Well, Michael, unfortunately, we're told that we've run out of time. So much to talk about. The Chancellor going to talk about lifetime allowance and increasing the threshold, and whether or not the financial crisis in the United States, which has reverberated all over the world, creating a systemic contagion in the financial sector, is another Lehman moment. There stands Lehman Brothers moment of 2008. But unfortunately, we don't have time to take a look at all of this. Maybe there will be time tomorrow. Now for business updates across the African continent, Rotus Odiri is here. Good morning, Rotus.
Morning, everyone. Channeling the spirit of Emmanuel Efeni, the cover of today's Business Day looks at how the cash crunch has impacted farmers. So Business Day profiled one particular farmer who has had to sell his produce at below production cost, that is his cost of acquiring them, because most of it, like he has tomatoes and so on, most of them are perishable, and he has had to sell them below what they actually cost because of the Naira scarcity issue that has been impacting farmers. And they talked about the impact on these particular businesses. And it's if you think about the supply chain for goods that are being sold, the vendors and suppliers of those particular goods, the impact that the cash scarcity has had has been pretty heavy on them. And so we now come to the central bank finally putting out a notice with respect to telling banks to accept these old notes. I think what's going to be the real crux of this is whether or not businesses are going to, are finally accepting, because we acknowledged this yesterday. And it's very interesting seeing governors in particular pushing this. You had El Rufai in Kaduna, you had Governor Soludo in Anambra State, you had Governor Sanwo-Olu on Twitter yesterday. The governors are really pushing, but then the businesses themselves are not accepting it, mainly because it's not just the endpoints as the final bakery that sells you bread or supermarket that sells you a soft drink. It is the suppliers of those items to those particular businesses that are also not accepting as well. So hopefully this changes things, because the impact is there. We should actually see a reduction in inflation, most likely because the cash scarcity has reduced demand for a number of goods. So you might see a slight deceleration in inflation when the inflation figures for January come out. But then also, my worry is GDP growth for the first quarter. we have another election coming up over the weekend that is going to shut down activity. The presidential election shut down activity even days after. You didn't see that many businesses, getting back up to speed because of the uncertainty around activity. So I do foresee a significant slowdown in first quarter GDP from the fourth quarter based on this scarcity issue, fuel and all the likes. Identity, the NIMC, Identity Management Commission, apparently is looking to charge 1,000 naira for the NIN verification for passport applications. They're saying that this is hopefully going to help in improving, efficiency, reducing the backlog for passport applications. If you are in another African country, I understand it's $5, and if you are outside the continent, it's 15. But for Nigerians here, it's going to be 1,000 naira. And then finally, the scam thing we're talking about, the recourse to get your money back after it's been, if you've unknowingly transferred funds to what turns out to be a fake business, is a slow, plodding process, and you're essentially going to file a police report and try to get that account frozen. But in order to do that,
which is always difficult.
It is
Tell me about it. It's almost impossible.
What I found out,
freeze it for you.
They used to do it in Lagos, but for some odd reason, it's been slowed down. So the police department has to file a request with a judge, but that's no longer done in Lagos. For some reason, it's been done in Osogbo, which is in Osun State. So the letter has to get there. The judge has to go through that, sign it off, bring it back here, and then they take it to the financial institution and hopefully get it frozen. And then another thing is, if the amount of money is quote unquote low, I don't know what is defined as low, then it's almost not worth doing for the security agencies to commit resources to it. So for the little guy stuff, if you're a big person, then you can just snap your fingers and get that done. But for the average Nigerian stuff,
the truth is, especially when you're doing businesses on Instagram, pay on delivery is always the option.
This is killing pay on. Sorry, you're correct.
Pay on delivery.
You now have to go pay on delivery.
So ask them if they have pay on. Anybody that doesn't have pay on delivery option, then obviously is not ready to do business, because it's definitely very shady.
Yeah.
So it's pay on delivery. But concerning this, I saw the story, cash chaos, and they profiled the farmer. Very interesting media reportage. But I'm very quirky with media reports, because you see, it is not the cash crunch that made this farmer sell at a lower price. Let me tell you the real problem: the lack of silos,
which need power
to be able to store
the goods. Yeah.
So how do when people produce, they store up in storage, and when they store up in storage, they can have little thing called agri exchanges, where they can hedge their prices as long as possible when the price even go up on the international scene, and they are able to sell.
Yeah.
But probably this farmer does not have access to silos, so he sells quickly to the middleman. And it's not because of cash. That's why I challenge this business this story. You know why I say it's not because of cash?
Okay.
Because most farmers, even before the cash scarcity, because of wastage and spoiling, and you forget in this country we have over 50% post-harvest losses, they are so quick to sell to the middlemen at cheaper rates just to get moving. So the real problem and the solution to the problem is government provides structures where they can put silos in place for people, agri exchanges. I know there's Afrex or something that's doing one of them.
Yeah.
The more we have them, the more we can incubate local farmers on these silo systems and get them on board, so that you can cushion the effect, so you can hedge the price on the international scene. But it's not because of the cash policy.
But if we have to wait for inflation. If you see a deceleration in food inflation and headline, then you have to have said you have to point to the fact that the cash crunch had an impact.
I'm not arguing that with you. That there's not going to be a deceleration because of the cash crunch.
Okay.
Because it's going to definitely reduce demand.
Right.
All right. I'm not arguing that with you. But this one I'm arguing is that common sense is common. That when you have a problem like this, is because of storage.
Rotus, yesterday I asked you a question. Are we affected in any way by the systemic contagion that has been caused by the collapse of the Silicon Valley Bank and also the collapse of the Signature Bank of New York? Now, yesterday, stock markets, Asia Pacific stock markets, Asia Pacific banks suffered. Even the oil market lost about $1. Problem everywhere. And the question I asked
Michael Wilson
was, are we back to 2008 and what lessons can we learn? Singapore says, for example, that it's not heavily exposed to this contagion, but is Nigeria exposed?
Right.
Because I've seen a story. Signature Bank of Nigeria is saying, no, we have nothing to do with Signature Bank of America. And then Flutterwave has been mentioned as part of the Y Combinator group. Okay, it's Flutterwave, the biggest fintech startup in Nigeria. Is it exposed? In England, yes, HSBC has moved very quickly, to take advantage of a deal brokered by Prime Minister Sunak. But they say it's significant. But how much is it?
£1.
Just £1. So I look at it. So here in Nigeria, what is really our level of exposure? Are we at risk? And are there lessons that we can learn?
Yeah, so yesterday we talked about Chipper Cash, their co-founder who put out a notice. We looked at the notice from Chipper Cash and also from Future Africa. It is mostly venture capital, or rather startups that have deposited money with SVB that are in trouble. I don't think compared to 2008, that was a mortgage-backed securities, subprime mortgages, and that was a housing thing that spread. This, I think, is mostly focused on the venture capital tech industry. So it's tech firms that they've had money with SVB, then African and Nigerian tech firms will be the one that will be affected. I don't see it spreading beyond that. Although regional banks, we've seen stocks in the United States.
So what is the lesson? Diversify your assets?
Diversify,
perhaps?
that is correct. That is the lesson.
I was also going to ask, in terms of President Biden's security, would it affect? Because what they're saying is that they might not have liquid cash to pay salaries, at least in the short term. But in the long term, would that be sorted? What's the...
So what Biden and particularly Janet Yellen said was that they will make depositors with SVB whole. That is, you will not lose your money. Okay. So they're saying it's not a bailout, but technically for the depositors,
they'll have access to
right.
the money.
So it's just for the depositors in SVB because they don't want the fear to spread. So it's kind of couched within venture capital and tech.
Quick update. People are beginning to get their money back in SVB. As at yesterday, a particular co-founder logged into the SVB website and she was able to make wire transfers out. So people have started getting their money. Depositors have started getting their money.
The major problem they have in the US is that they are still trying to find a buyer.
Right,
for
exactly,
SVB.
for SVB.
And if they don't find a buyer, well, that could be a problem. Maybe they will follow the British example and sell for $1. Thank you very much, Rotus.